This is Jake Unfiltered. I think that the best thing you could do when you start out in investing is put the majority of your portfolio into ETFs such as VTI, VOO, VT, and you could also like look into ETFs that are ETF trackers, maybe possibly if you're feeling frisky, VGT, because VGT has a really good track record of getting a lot of returns. VGT is one of the more riskier ETFs out of the bunch. Like VOO is the top 500 companies. VTI is the US stock market, so you pretty much just grow with it. And VGT is technology index funds. So it has a lot of the technology sector in VGT. And you see today it tanked just like Apple tanked today. So if you look at Apple stock, you see this trend here, it goes down. And then you go to VGT, which is an ETF, it goes down. So I'm thinking that a high percentage of VGT's portfolio is in Apple. But if you look at the track record, okay, the last 5 years, VGT is up 209%. And if you look at VTI, their last 5 years was up 88%. And that is definitely a lot less of a gain than VGT. So I would say out of the three VOO, VTI, and VGT, VTI is the least performing, but probably safer because you are in the entire US stock market. So you're pretty much just growing with the stock market. So 88%, and then we got 200%, and then Apple has 387%. So why am I comparing this to Apple? Is Apple still a good investment? Is Apple going to keep increasing? It has a $3 trillion market cap. Just kidding. $2.85 trillion market cap. And if you think about it, that is a huge amount of money. That's all invested into Apple. I'm sure there's a lot of whales into the Apple stock, such as Berkshire Hathaway and a whole bunch of retail, a whole bunch of institutions. And, if one of these guys decides, I'm going to get rid of all my Apple stock, which wouldn't be the best idea, it's going to tank. Okay, what if, it loses 800 billion overnight? Then I bet you a lot of people are going to buy into Apple because, like, Apple isn't like Facebook. Facebook is just a shitty social media site that is corrupt. But yeah, their max performance is 200,000%. So if you would have just bought a whole bunch of shares back in 1983, you would be like super uber rich. Okay. But yeah, 5 years. Do you think that in 5 years from now, it's going to be up another 387%? It would have to go up a lot. I'm comparing this to VTI and VGT. So, like, should you buy a stock or should you buy an ETF? Personally, I think that you should invest in both of them because ETFs will save your money and they are good for retirement, and stocks are good for just investing and building wealth a little faster than you would with an ETF. And if you find a small cap, medium cap stock that you find with a lot of potential, like Apple would have been back in the day, and you can invest in it in over 5, 10 years, it could be up 100,000% like Apple is. So, I mean, I would like be very careful though with buying these small cap companies because you can lose a lot of money. You could buy in like Nikola Tesla, and then you find out that their CEO just scammed everybody and like they never actually had like a vehicle that worked. They just said it did. But he is not CEO anymore, and apparently their company is turning around. So Apple, I still believe that Apple can gain a lot. And I also believe that Microsoft can gain a lot and all these other companies. let's see how Microsoft is doing. Microsoft, you see, like all these companies have the same exact, like dip in the market today. And then last 5 years, Microsoft's up just about as much as Apple, 369%, a little less than Apple. So I personally would invest in, like, if you are a beginner, invest in companies like Microsoft, Apple. Mainly, I would go like 90% of your portfolio into ETFs so you can, but like this is retirement portfolio. I mean, not everybody has to, 90% into ETFs. That's what I was going to say. But not everybody has to do that. You're your own person. You can do whatever you want. So you could go like 50% into ETFs and then, buy some Apple, some Microsoft, and then like top your portfolio off with really good companies. Kind of like in the ETF itself. Like it has um, a lot of good companies in it on their top 10. It's like really weighted with the top companies. And let me show you. So if you look at VGT, their top weighted company is Apple, and that's why you've seen the dip in VGT, because like alongside Apple, because most of their performance comes from Apple and Microsoft and Nvidia, Visa, Mastercard. So like I think that a good way to weight your portfolio is to invest in these really good, nice companies that make a lot of money, that are profitable, they have free cash flow, they can build their company even more. You know what I'm saying? And then this is not financial advice, by the way. Like I'm not telling you to do anything. This kind of like I'm talking to you, but I'm talking to myself at the same time because I made a mistake and I invested into like startup companies and companies that I thought might make money over time, but they didn't do good. And if I would have invested in Apple when it was $120 a share, I'd be like doing really well right now. I mean, I did buy Apple, but not like my top portfolio was in Apple. And I think that buying these companies that are really good would be a good idea to like stabilize your portfolio. Okay, let's say like 90 or 80% of your investments are in good standing, positive cash flow, profitable companies, and all that. And then whenever the market crashes, you're not going to lose all your money. You're not going to lose everything you have because you invested in a bunch of speculative stocks and all your speculative stocks tanked because those are the stocks that tank when there's a crash. And, these top 10 companies, they hold up a lot better than all these other companies. So if you look at Apple over the last 6 months, okay, 6 months. I said 6 months, man. I said 6 months. What do you mean there's no chart available? Hold on. So back in December 2021 is whenever all the stocks started taking a hit. And if you look at AMC, if you would have put the majority of your portfolio in AMC, you watched down in December, it started crashing, crashing, and crashing. And then it went all the way from $40, $45 down to like 15. And then if you go over to Apple, it just like a little crash, like not much. So it went from $140 all the way up to 178 or 174 as of today. But AMC went from higher down to lower because it's a speculative garbage company that's not profitable. If you look over here, their net income is negative $134 million. So, I mean, they're not getting much profits. But if you look at Apple, their net income is 34 billion. So, I mean, buying into a good company will definitely save your portfolio from losing a lot of money. But that's all I got to say much of. And also with VGT, like, look at the last 6 months. Like, it didn't crash as much. I mean, it did do a lot worse than Apple stock because Apple is a very steady company and a lot of people put their money into Apple whenever this happened, and because people trust that company, and the ETFs, they normally always recover, so it probably would be a good idea to invest in like VGT, VTI. You look at the last 6 months, like it definitely hit some rough roads, but like this ETF, it's not going to go to zero unless the stock market goes to zero. AMC could go down to $1, but VTI, VGT, they'll all recover, and then they'll bring you a huge return, right? Let's see the last 5-year return of AMC, negative 18%. So, and then look at this. This is crazy. Like if you see a company shoot up like this line right here, it's best to avoid it and not buy in at the top. Because there's a thing called FOMO, and then you're like, oh my god, I'm going to miss these huge gains. But the gains already happened, and everybody sells out. Alright, this is just my little advice, and it's kind of like I'm talking to myself, because I messed up as well. And you know what? At the beginning, we all mess up. And I just want to, say my due diligence, and like my advice is not my financial advice, but my recommendation, not my financial recommendation, is to just, weight your portfolio with some really good companies like Microsoft, Apple, BGT, VTI, VU. VU did pretty good as well. You see, like all these companies, see what you can do is you can go to the ETF, like VU, see what their top 10 holdings are, and then you could invest into the companies or think about investing into them. Like Amazon is a really good company. Like I invested into it at its low and it went up. Google, Amazon, Microsoft, Nvidia, Berkshire, maybe. Facebook, maybe. I don't know about Facebook. United Health Group. Facebook tanked. But since it tanked, it could go back up a lot. And as you've seen with Facebook, it dropped 200 billion in market cap. So that means that these companies, you're never going to know if a company's going to tank or not. But if you would have watched how Facebook was doing, with their platform and how they're always going to court and everybody hates them, you would know that it's a risky company. And Apple is always doing really well, and so is Microsoft. Amazon, they're just getting bigger and bigger. Like if you look into Amazon, it's probably one of the best companies to invest in. Tesla has a really high PE ratio and is very risky to invest in, but since it has such a high market cap, it's in the top of VU, one of the top 10 companies in VU, because it's weighted by market cap. So yeah, a lot of successful companies here. Weight your portfolio appropriately. And be careful with these small cap, mid cap, speculative companies. All these meme companies you want to avoid. Possibly. I mean, unless you know what you're doing or you believe in the company. Also, I wouldn't invest personally into a company that I don't believe in. And I know that if the company tanks, I won't be worried about it. I will be happy that it tanked, and I will invest more money into it because it's on sale. Now, if a company that I buy tanks, and I know if it tanks, I will be worried, and I don't know if it's going to recover because I don't know much about the company, avoid those companies, unless you really want to. I mean, that's up to you. I'm not giving any advice, but this is like what I learned in the stock market. Thanks for watching. Like, subscribe if you enjoyed the video. If you didn't enjoy the video, hey, you don't gotta do nothing, all right? I would just appreciate a subscribe because I have now 85 subscribers and I can't wait to grow even more. Thanks for watching.